if there's anything that you want to share with the community, maybe there's something that you've seen this week, maybe a conversation you had with someone or a deal that you're working on, that would be really cool, really interesting to share with people.
Yeah, definitely. Well, always fun to get on here and talk the market. I think over the last few weeks, it's been as we talked about last week, the market's been a rough market for many builders, developers, and landlords. Quite frankly, prices have remained high. Interest rates have come down a bit, but now we have additional uncertainty with everything happening in the Middle East, and so I think that's kept capital a little bit tight and a little more conservative than maybe a more stable market would allow for. So, one of the things that I've seen more of is just people needing help thinking through options on a deal. So maybe before you could just go to your local bank or to your standard lender, and it was very simple and straightforward. And deals that we've been working on recently, we've just had challenges where maybe appraisals came in lower than expected. Current lenders may not want to extend terms because they've already been in the deal and the market is skeptical, so they just want to get paid off. And then new lenders are skeptical of getting into old deals, and so I think having a company, a group, like ours, whether you use us or you have your own CFO in your own firm or your own shop, I think it's really important to have a pulse on the market, know where things are, know whether it's you and your deal, whether it's your market, or whether it's just capital that is being constrained right now that is causing these challenges. And so, Evan, who's our chief investment officer and chief operating officer, he's done an amazing job of going out and scanning the market. In fact, for one of our clients, we probably went to about 70 different sources of capital to find multiple different options, from ground leases to pref equity to new senior debt to takeout financing from the agencies. We've looked at PACE financing, if you're familiar with PACE. And so there's a lot of different things that can be used to get a deal done. And I think now more than ever is a time where you really need someone who has experience. You need to be open to new forms of capital. And you need to be, not only conservative in terms of your underwriting assumptions, but you need to be aggressive in terms of your willingness and desire to find new sources of capital. So don't wait for someone to knock on your door saying, "Hey, I have something good for you." You're going to have to go out and find it, especially in this market, because those who are finding the capital are the ones that are getting their deals done, while those who were used to maybe a different market where capital is knocking on your door, they're not getting those calls today, and they may be constrained on the deals that they can do and how to make it work in this market. So I'd say that's the overarching theme that I've seen. And I'd say the other thing is that I've seen a lot more movement towards multifamily deals versus traditional single family deals. I think that may be just because people are getting a little bit more worried around home sales in general, and where that market is. Whereas I think the need and demand for apartment buildings and for communal type living is just in a higher demand overall. The challenge in the multifamily market, for those of you who may be in that market, is if you underwrote a deal in the last 3 years, you probably are in a market where the assumptions aren't meeting what you told your investors or what you expected. And so there's definitely some challenges for people who've been in deals, but I think there's some new opportunities for those who are looking for new deals, or those who can come in and provide a new way of providing a product to the market. Specifically, there's a huge shortage of, I'll use this term lightly, but affordable housing, right? And so there's definitely governmental terms that qualify as true affordable housing. But when I say affordable housing, I mean just homes that people in your market can afford. Maybe a better word around that would be like workforce housing. So I'm familiar with a situation where I think, there's some builders, developers that I know who are doing maybe some commercial developments. But the challenge is there's no housing for the workers in the nearby facility or vicinity, I should say. So there's opportunities in every market. And I think this is a time where those who are really in this market long term can gain some serious traction. Yeah. So sorry about that.
Oh, that's good. That's good. Yeah, yeah. I think you highlighted some really important challenges that people are facing right now and how they're making decisions around, what asset classes to choose, but then also just navigating what's available and accessible to them as well. It's one thing for someone to want to dive deep into something different or something new, or they see an opportunity to go into. But that is another thing which seems to be coming up quite a bit is people not knowing what is available for them in order to go after some of these opportunities, especially when maybe it's so new to them. And they can get education around it. I believe that education is available for everyone to get, but then it's okay, I have the education, but now how do I get a deal done? And I know that's what you and Evan really focus on is to make sure that like you said, going after 70 different, just inquiring 70 different sources of capital just to see what can be done to make a deal happen and whether or not that can happen, right? I think there's something. But when this question came up, and we can probably start here because it's kind of piggybacking off what you said, which is I think people will have these opportunities, but the question is, maybe they have limited options. Maybe this builder investor, they have limited options in order to get the deal or what they perceive as limited options. And they don't know that there are other sources available in order to get something done. We could talk about investing in an existing asset or if it's ground up, fine. But I think the bigger key is people don't know what they don't know. And I see this quite a bit, particularly in people asking questions in different groups and forums and communities of people not knowing that there are options available to them. And I think the biggest fear is not even the right word. It's just the due diligence that comes along with that, right? And can a deal actually get done? And I think when people find someone in their corner, and I'll let you talk here in a second, they find someone in their corner that can help them to walk through the fact that there are options available. So the question really is, you know, someone who someone may come to you and think they have limited options, and what is your process maybe for going and finding additional options for them or let them know that hey, there are different ways to navigate this. And that's kind of what you allude to when you talk about, a real estate CFO or someone who's going to be in your corner, not just like, hey, let me just find you the best rate for your situation. It's really about navigating, and it really is an advisory sort of opportunity for someone to get that sort of insight that they need.
Yeah. Yeah, absolutely. I mean, I would say a couple things. In the same way that I'm telling the audience to expand their horizons, we've had to do the same thing. So this is really kind of, I'll call it kind of top down and saying, hey, this is actually what we're doing to also continue to provide additional value to clients. Listen, if you have a good capital source and they continue to fund your deals the way they are, there's no need for you to change anything. But if you're finding challenges, that's where you have to start doing additional work and or find a partner, a company, a group that can help you do that. And so, we can all go online these days. You can use your favorite, LLM, ChatGPT, et cetera, to go search for additional sources of capital. But I think the reality is capital really moves based on relationships. And so the real goal for our company at USDV is to like build relationships with not only great borrowers, clients that are builders, developers, and landlords, but more importantly, or I say equally as importantly, is building relationships with capital sources. So, having done 8 funds of our own where we were the direct lender on all of the deals, the one thing that I realized after doing over $1 billion worth of deals is we're only one small piece of the market. And I really enjoy being in this advisory role where we can say, hey, maybe our capital isn't the best suited for you. Let me go help you identify the best source of capital. And so, one of our core products or services that we offer is called Real Estate CFO. And the idea behind it is to really sit on the same side of the table as our clients, as our borrowers, so that they have someone who's an advocate for them, someone that's going to negotiate for them, someone that's going to go talk and speak the financial jargon and language needed to get new capital sources and to get the best terms on existing sources. And for our clients who see that value, like it's a great fit. And I think, it doesn't mean you can't try to do this stuff yourself. Many clients have. And that's why we found a real niche and I think gap in the market. It's like, hey, do you think you're going to negotiate with 20, 30, 50, and the one case that I mentioned with Evan, over 70 capital partners on your deal than we will, right? And even if you could negotiate better because you're the greatest salesperson in the world, is that your core business? Or is your core business building, developing, and being a landlord? And so, our core business is being the best capital source and advisor for our clients. And that's what we do every day. And so I wouldn't pretend to say, hey, tomorrow, just because I'm a smart person, that I'm going to go out and become as a good of a builder, developer, and landlord as you. And in the same way, after having done financial services since I graduated college, and goodness, I hate to say it, 31 years ago, like this is what I've done. And so being able to pick up the phone and say, hey, I know the CEO of this company. I know, the president of this company, not only maybe through conferences and networking, but maybe they're friends of mine. And so being able to pick up the phone and get real answers from real people to say, hey, can you take a look at this deal? Like, relationships matter. When capital gets constrained and someone says, hey, I can look at Todd's deal, or I can look at Joe Schmo's deal over here, and I don't know Joe Schmo, but I know Todd, like Todd's deal is going to get looked at. And so doesn't mean Todd's deal is even better than Joe Schmo's deal. It just means relationships matter.
I think that's something you highlight really well, and we like to make it very apparent for people is, this is, I mean, an investor or builder understands this because a lot of their opportunities come from the relationships that they have. And so knowing that they can have someone in their corner who has the relationships, and who can get in the room and who can have the conversation. It's a big deal because there's a lot of trust built in. A builder works with people that they trust, and they want someone that's going to be in their corner. And investors across the board they're just looking to get deals done. And so it makes complete sense that if you can have conversations with people who can then have conversations and actually work on your behalf, that's a massive win for
Yeah.
anyone who's there. Okay. You highlighted something earlier, which is, you're seeing people sort of jump into opportunities. You reference multifamily asset classes just as an example. And then I believe, last week you even discussed, maybe some markets that were actually seeing some upticks, contrary to what like maybe general real estate data shows, right? But people are seeing like, grounds, boots on the ground sort of situation where people are seeing things that are happening. Are you seeing people shift more towards some of these asset classes simply because of the market economics, or is it more so because they can actually get deals done, or does it have to do more with the stability of the class?
Yeah. I mean, I think it's a couple things. And number one, I think on the single family side, in particular, and that could include built to rent homes or things like that, but where it's a separated, detached kind of residential living, I think number one, people are looking to lower their cost of construction. Um, because to the extent that you can lower your costs, that just makes you more competitive. Um, I think the other thing is saying, well, let me take a step back. Within that, I specifically see people moving towards more mechanized solutions, which are still relatively new. So we may have heard of people doing 3D printing homes, or container homes, or you even see tiny homes and things of that sort. But you have people doing kind of precast walls out of concrete, or building with ligated steel in a factory and then assembling at the site. And so although many of these technologies are not necessarily that much cheaper than traditional construction builds, they may shorten the time frame a lot, which could reduce your financing costs. That may allow you to get to market sooner, whether you're selling or renting. It allows you to get back to cash flow quicker. And so I think finding your little niche and little ways to get better than someone else is really part of it. The other part is I've seen people doing traditional stick build, and they just have maybe a benefit on the labor costs, and that's their thing, and they have access to cheaper labor than someone else does. And so however you do it, whether it's mechanized or through human beings, finding that competitive advantage is really important. Finding land. I see many people working with landowners and having them become partners in their deal. Like, hey, you own the land, I'll bring the construction. Your land is just costing you money every year in taxes, right? And why don't you let me build on it and I'll pay you for your land as we sell the home or as we refinance an existing project at the end. So I think once again, it's like, Pace Morby does a great job of this, of the idea of creative financing. And I think, or creative finance. And I think in the same way, like, not saying you have to do his specific strategies, but the terminology I think is important, which is how can I be creative in terms of how I finance things? Because time is equal to money. And it's funny, as I say that, I have a big X in front of me because I remember Myron Golden saying, time is not equal to money, time is greater than money, because you can't get back time. You can always get more money. So I'll take a shot at myself to say time is greater than money, because I agree with that. But the fact is, time does cost you money. And in that way, if you can cut the time, that's probably more valuable than the money in and of itself. So finding ways to cut down the time, obviously then cuts down your finance expense, whether that's through equity partners that are giving you money to do the deal, or a bank who's lending you the money. One way or another, there's three questions, and I think I mentioned this last time, that you want to be able to answer to any investor, whether it be a lender, which is always really straightforward, right, or an equity investor. And it's so interesting that we don't treat equity investors with the same level of clarity and certainty. And I'll say transparency that you have in a lending situation. And the questions and answers are: how much money do you need? How long do you need it for? And how much will I get back? Right? When you get a loan, it's very clear. You're getting X amount of dollars. Here's $500,000. You have 1 year to pay it back, and I'm going to get paid 10% a year on my money. So I know exactly how much I'm going to get back. And in the same way, we need to have that level of confidence and transparency with our investors, because on the equity side, which we may not know the exact numbers at the end, but it should be very clear what our targets are, what our goals are, and it should be, we should be able to give that level of comfort to an equity investor. So um, I think that's it. I mean, I think it's a matter of you know, being creative and looking for opportunities where they exist. Sometimes that's in the same asset class that you're in. It could be another asset class, like I mentioned, like multifamily, where maybe, you know, it's rentals. So what I see a lot of my single family guys doing is they're re-gearing their investors to say, listen, we're going to still build houses, but we're going to build them to rent, one house at a time, and we'll sell in 3 years or 4 years as the market gets better. So they didn't just totally shut out their business and say, well, I'm not going to do any more building. I'm done. And then maybe if you have enough wherewithal and experience on your team, maybe you switch asset classes completely, or you switch markets completely. And so those are much more difficult decisions for people to make. And I would caution anyone who's going into a new market to go to do that, because you just don't know what you don't know. What I do find is, if you are going to go to a new market, maybe finding a partner, a mentor, someone who is successful in that market to help you navigate it for the first few deals, so that you actually start to understand the zoning, the code, who you need to schmooze, and, things that are just not on paper. You just don't know until you're there. I remember when we were doing lending, and we had a non-performing loan. Um, there's a community called it's in Sunny Isles, and it's here in Florida, but it's a small little community. And I remember, I think our landscaper, who was maintaining the property, had cut down a tree, and turns out there was an ordinance that you had to keep a certain amount of trees or whatever on your property. And next thing you know, we were getting a fine of something crazy to the tune of like $250 a day for every day we didn't replant a tree there. And long story short, like, those are little things that if you don't know and you're not on site and close to, like, you don't get those things resolved. And a representative from the company, in this case me, had to go to the office building to get this resolved. It wasn't like I couldn't just send my real estate agent or someone else. They needed the principal of the company to resolve this $250 a day situation. And so I say all this just to say, like, you don't know what you don't know, and those are things that you wouldn't necessarily know. It's not something you even think of when you're working on a project. But having done enough deals over the years, I've seen a lot of strange situations where it's like, oh man, one mistake could really cost you a lot of money. And here was one where, quite frankly, I've seen, a home in this case, and the city doesn't really care. They'll just put a lien on your property and they tack on $250 a day. And then when you go look to sell your house, you're like, oh, I listed this house for 3 months. And, do the math. I mean, it can add up really fast. So just something to be really mindful of whenever you get into new markets. So I just, although we want to be, open to new opportunities, we also need to be cautious as it relates to things we just don't know. And so finding a good partner or someone in a new market would be probably a prudent choice.
Yeah, I think that's a good point. I think there's a difference between shiny objects and then actually, being conscious of, what's actually happening there. Like you said, actually being someone who's on the ground in the mix, connecting with people and finding out what is actually happening here. And there are some things that just pop up. You just don't know. And I think a lot of investors can talk about that. Like they can pinpoint situations where they didn't foresee that happening, and then it just happened.
Yeah, and I think along those lines, I mean, one thing I'll share real quick that I think is helpful. Let me share the screen. And if you look here, this is an app that I would encourage anyone who's active in real estate to go use. It doesn't cost much money. I forget the price now, maybe $20 a month or $30 a month, but it's called the Reventure app. But there's a lot of good information, and I think you can even get some basic stuff for free, which I didn't even log in here. But like here's like Florida for sale inventory, right? So you can just see like, hey, inventory really dropped all the way down in 2022, and we're pretty high relative to the past 10 years or so. And so like, hey, if there's a lot of inventory in your particular market, well, that may be a sign that, hey, maybe it's a good time to buy if you're a buyer. Or it means maybe it's not a good time for me to build because there's an oversupply right now. So, conversely, let's say we're a market where there's not a lot of inventory. So like knowing market data, not like in this case, this is, we're looking, nat or statewide, but you may want to look more specifically down into a particular county or zip code, so maybe, I go and I say, hey, let me look in Broward County, Florida, and being able to specifically look a little bit more granular, or, hey, I want to look even more granular. I want to look at, a particular, zip code, here, let's say Davie, Florida. And so like, hey, Davie, Florida maybe isn't as bad as a whole county, right? So just understanding those dynamics that maybe someone else wouldn't be aware of where, I know, for instance, let's say on the west coast of Florida, like, Cape Coral, I want to be a zip code. Let me get like a county, and let's say Lee County in Florida. You'll see a huge spike in inventory. So like just understanding some of these things, many times we do things without doing our homework. And so I'll just encourage you to like not only like listen to what you see outside, but like there's a lot of data that's out there that you can get. I think, yeah, look, $39 a month. I mean, you can lose $39, in a split second. So like just take some time to get the data that will help you become a better real estate investor. I use it. We use data sources all the time as we're making lending decisions. And so I would encourage you to do the same as an equity investor. Like, where are you getting the information? And I hope it's more than Zillow.
Yeah, that's a great point because what happens is people can just spend some time actually just doing the research. I think there's a lot of gut instinct and intuition that comes with it. Willing to place bets, willing to, having a good risk tolerance, all those things, teach in investing. But the bigger one is if you can do the research, then you have informed decisions that you can make. And for example, like the Reventure app or a lot of these other tools, just being able to do the research to know what direction you should go in, and then you can start to explore the opportunities that come with getting into those markets. Just as an
Yeah,
example, right? And I think that's a
absolutely.
big key because when you are speaking to, for example, when you're speaking to investors, you're looking at what they're essentially what you discuss really is their investor profile, right? Or like their investor DNA. You know,
Yep,
how are they thinking
exactly.
about this? You know, is this the right thing for them to go down? Sometimes things can just look really good, but maybe it just doesn't fit their investor profile. And
Yeah,
so that's
exactly.
something that you talk about where you advise them essentially like, you know, how about we look at this, you know, differently or with this other
Yeah,
viewpoint.
exactly. Yeah, I agree. I mean, I think it's interesting because I was speaking on a um, podcast the other week, and the host Andrew Fraser had asked me, a question, something along the lines of like, what it may not have actually been live on the podcast, it may have been on a separate conversation, but it was an important question, which was something to the point of like, what does success look like, or what's the end goal, and I think in all of it, that's something that's really important, because sometimes we get so focused on, hey, what's going on today, or what's going on in the market, or things could be great or they could be tough, but the fact is, like, what's it all for, right? Things could be great, and a great example, I mean, my wife and I watched this movie. I can't think of the name off the top. It's with George Clooney, and he's an actor, and he basically has this huge success as an actor. Um, but in the end, he didn't have a relationship with his kids, and he was kind of looking back, and it's like, what was it all for, right? And it's like, so it doesn't mean like these conversations only need to happen when things are hard. It's like, why am I working so hard and not getting results? It could be, I'm having a huge amount of success, and yet I'm still missing out on the most important parts of life, right? And so I think, once again, like, as you take this time, I think this is a great time to like dig deep, like, not only in terms of work ethic, but dig deep into why you're doing what you're doing. And it kind of ties right into what you're talking about. As I talk to investors, it's the same thing. It's like, my number one goal is to understand a basic human need, right? And people's human needs are, once again, I didn't create these, just grabbing them from Tony Robbins, who I'm sure got from someone else. But it's like, certainty, right? Some people they're really here for certainty. Others might be there for uncertainty or variety. They just want, hey, I don't want to eat steak every day, even though I like steak. I want some variety. So maybe is your investment with them, something different? Um, Love and connection. Are you doing it to be connected to people, or is it for significance? Steve Wynn said, who built, Encore and Wynn hotels, and all these properties around, the gaming world. He said that the human need that people will pay the most money for is significance, which is interesting that he knew that. And obviously you can see it. People, they're going to send out a private jet for you, a Rolls Royce to pick you up, and give you the top room suite, and give you all the food and drinks, and you're going to leave the casino losing hundreds of thousands, if not millions of dollars, but you felt significant the whole time you were there, and people pay for significance. So the two higher level needs we can save for another discussion, but being personal growth and contribution to others, it's like, hey, what really matters in the end? Am I growing personally? Am I helping others? And so I just say, like, these are great times to, like, when things are slow, to just dig deeper and to find new ways to add value to the marketplace. In fact, it was another business colleague of mine, Alan Wu from Sequoia Enterprise Solutions, and he said, 2026 is a year to be a hero. And number one, be a hero to yourself. Right? What does that mean? Taking care of your body, making sure you're going to be around. We take for granted our health. Number two, be a hero to your family. Right? How can you do that? And then number three, be a hero to your community. And I think in the same way, like, hey, this is a time for all of us to step up and to be heroes. How can we be a hero to ourselves, our families, our communities? And I think if we take that approach, it's like, hey, this is just a time to get better. And I really look forward to
Awesome. That's a wrap, Todd. Thank you so much for this.
that.
We'll be back
Awesome,
next
man.
week.